All right, looks like we have the same Natalie King, Organized Real Solutions, new consulting firm on October the 1st. And October 31st, the company records the following items, and we're supposed to put together a balance sheet. A balance sheet shows what the assets, liabilities, and owner's equity are at one point in time. In this case, Halloween night. Notice that in all these exercises, the ones you're going to do, every time we do a separate little statement, even though the heading is the same, we're going to have a different set of numbers because you need the practice of putting these things together from a different set of numbers. So we're supposed to put together a balance sheet, and balance sheet looks like the following. Has an asset section, has a liability section, and it has an owner's equity section. Now, I'm going to list the assets first. We've got cash, $2,500, accounts receivable, $15,000, office supplies, $53,13. We got land of $36,000. Office equipment is going to be $28,000. That's all our assets. Let's see, do I have a total here? I do. I have a total of assets of $86,813. My next section will be liabilities, and from this list, my first liability will be accounts payable, which will be $93.75. And I don't think there's any other liabilities on here. There aren't any other liabilities. Now, if you've got total assets and you've got total liabilities, it's easy to come up with owner's equity and take a shortcut. Or you can do the following. Let's see. I've got, I just went ahead and took the shortcut. Looks like the equity at 12, at, excuse me, at October 31st was $77,438. And notice this is not up here. We have owner's investments of $74,998. We got cash withdrawal. We got consult. We got all these different accounts up here. And I just out of the blue gave you this $77,438. Well, where'd that come from? Well, I could have done this, and in the real world, you might go ahead and do this. I could have said, okay, in order to get this balance sheet, you're going to have to put together an income statement, which would be the $17,000 revenues minus these expenses to come up with $5,800 worth of net income. Then I could have said, now from that income statement, you got to also plug in to the income statement this net income figure, and say that on October the 1st we had zero capital and we had investments of $74,998. The total would be $80,798 minus withdrawals of $33,60 from up here. You come up with the capital, ending capital balance of $77,438. So you could have put together two separate statements in addition to this balance sheet, which would be a revenue income statement and this statement of owner's equity, or you could take the magic shortcut. And the magic shortcut is this. We know that this equation's got to stay in balance all the time. And if we know that assets are going to be $86,813 and we know that liabilities are $93.75, the difference between the two would give us what our equity is, owner's equity, capital, at that point in time, which would be the difference, which would be $77,438. That's how I came up with that magic number instead of doing these statements. I want to show you both ways, but I like this method better. If you understand that assets have to always equal liabilities plus owner's equity.